Hello everyone, and thanks so much for joining me on our next lesson for our research theme, China and the global economy. In this session we're going to focus on some of the key challenges that the Chinese economy faces and what's really concerning economists and analysts. Okay, let's take a look. So the first point is really just regarding the amount of total debt within the Chinese economy and how quickly that level of debt has increased. Okay, so from period in 2008, I believe it was something like 155%, and now it's increased to 270 at the end of 2016. So this is concerning some people that many corporations in China have taken on too much debt, and some of those loans have gone bad and will not be repaid, which could of course trigger banking based problems. Okay, so that's seen as a concern by some people. However, the prominent economist Yukon Huang believes that actually that level of debt is appropriate for a country which is a bit above normal LEDCs but not an MEDC. He believes when you compare it on that sort of scale that it isn't actually that big a problem. Okay, so anyway, let's move it on. Next point. Investment accounts for 47% of GDP growth. So we can see that the Chinese economy is still reliant on capital expenditure and investment in infrastructure and so on. So this of course raises all sorts of problems because of the diminishing returns to capital. And so this sort of growth from investment spending cannot be sustained in the longer term, as the Solo model shows us. Right, next point is the reliance on real estate, on the real estate or property market. So again, the construction boom that has been taking place, part of this investment will be going into the real estate market, and again this is concerning some people. Again, that same economist Yukon Huang is not as worried about this because he believes that actually if you look at property prices in Shanghai and Beijing, that you'll actually find they're quite a bit lower than they are in, for instance, Mumbai or Delhi. So when he says that you put it into context, they're not as bad at all as some other economies. So very, very debatable, but some people are concerned about this, particularly when you factor in debt, which may well be financing some speculative investment in property. Okay, our fourth point here is the longer term policy decisions that the Chinese economy faces. The concern is really that the policy decisions that are made may well be done in terms of favouring local Chinese champion firms. Now, this can raise a problem because it can mean that instead of allowing trade and allowing foreign direct investment, that China's economy deliberately focuses on these local Chinese firms. In so doing, this may be a form of protectionism, and this may also therefore reduce the dynamic efficiency of the economy, because they will not be benefiting from those same human capital and technological transfers that can result from Western experience and Western trade and Western capital goods. So there is a slight concern there, and further to that, if they are favouring local Chinese businesses, there is the danger of the US actually deciding to retaliate. Okay, but the biggest point, the biggest challenge that China faces quite clearly, which encapsulates many of these plus many more, which we'll look at in a lot of detail later, is this one regarding the middle income trap. Okay, so Xi Jinping, he calls it the Latin America trap. Just to put this into some sort of context, if you just try and think of a Mexican brand, or a Brazilian brand, or a Peruvian brand. Okay, it's not easy. An Argentinian brand, it really is tough. By comparing that against, say, South Korea, and thinking of a Korean firm, you may well have just thought of Samsung there, or possibly Hyundai. Okay, but you can see the differences between those economies, and China needs to evolve to become more innovative. Okay, right, that's it. Thanks ever so much.